China's June 2024 trade figures are out. The numbers have just been released, and they are causing quite a stir in the global economic community. On the surface, they paint a rosy picture. The initial data suggests a robust and thriving economy, with indicators pointing towards significant growth. Exports surged by over 8%. This is a substantial increase, suggesting that China's manufacturing and export sectors are performing exceptionally well. The global economy must be booming, right? With such impressive export figures, one would assume that international trade is flourishing and that global demand for Chinese goods is at an all-time high. Hold on. Don't pop the champagne just yet. It's important to take a step back and look beyond the surface-level data. A closer look reveals a far more complex and concerning reality. The numbers, while impressive, may not tell the whole story. This export surge might be a mirage, a temporary illusion in the vast economic desert. There are underlying issues that need to be addressed. We need to dig deeper. It's crucial to analyze the factors contributing to this surge and understand the broader economic context. We need to understand the forces driving these numbers. Are they sustainable, or are they the result of short-term measures and temporary boosts? Only then can we separate fact from fiction. It's essential to distinguish between genuine economic recovery and superficial improvements. Only then can we answer the crucial question: is China's economy truly on the mend, or are we witnessing a carefully orchestrated facade? The answer will have significant implications for the global economy and future trade relations.
The headline figure is certainly eye-catching. An 8% year-on-year jump in exports is nothing to sneeze at. It suggests robust global demand for Chinese goods. It fuels optimism about a potential rebound for the world's second-largest economy. But is this surge in exports sustainable, or is it built on shaky foundations?
The answer lies not just in the numbers themselves, but in the context surrounding them. Global economic headwinds are intensifying, trade tensions are simmering, and within China, a host of challenges threaten to derail its recovery.
Here's the catch. A significant portion of this export surge is driven by front-loading. This means that businesses are accelerating their shipping schedules. Chinese businesses, fearing impending tariffs and trade restrictions, are rushing to ship out goods. They are trying to get ahead of potential economic barriers that could make future exports more difficult and costly. They are pulling future orders forward, artificially inflating the current numbers. This creates a temporary spike in export data, making it look like there's a boom. Imagine a farmer harvesting his entire crop weeks ahead of schedule, fearing an impending storm. The farmer is trying to save his produce from potential damage, but this rush has consequences. The harvest might seem bountiful now, but what happens when the actual harvest season arrives? The fields will be empty, and there will be nothing left to harvest.
This front-loading frenzy creates a distorted picture of China's true economic health. It gives the illusion of robust activity, but it's not sustainable. It masks underlying weaknesses in demand and production. Factories may appear busy now, but this is just a temporary state. It's like injecting a sugar rush into a patient running a high fever. The sugar gives a quick burst of energy, but it doesn't address the root cause of the illness. The temporary boost masks the deeper ailment. Once the sugar rush fades, the patient is still sick, and the underlying issues remain unresolved.
Section 4, Import Slump, a warning sign on the wall? While exports grab the headlines, China's import figures tell a different story. Imports contracted sharply in June 2024, painting a worrying picture of domestic demand.
This decline is not merely a side effect of front-loading. It reflects a broader trend of slowing economic activity within China. Chinese businesses are buying fewer raw materials and components. Consumers are tightening their belts, cutting back on discretionary spending. This decline in imports is a canary in the coal mine, signaling trouble ahead for the Chinese economy.
Section 5. Prices tumble. Deflationary ghosts haunt China. Adding to the gloom, prices for key commodities and goods are falling in China. Food prices are down, reflecting weak consumer demand. Producer prices, a measure of wholesale inflation, have also tumbled, indicating oversupply and sluggish industrial activity.
This deflationary spiral poses a serious threat to the Chinese economy. Falling prices can lead to a vicious cycle of declining profits, investment, and employment. China needs to reignite domestic demand and boost business confidence to ward off the specter of deflation.
Section 6. The Dragon's Dilemma, navigating a turbulent sea. China finds itself at a crossroads. The global economic outlook remains uncertain. Trade tensions with the West are escalating, and domestic challenges, from a property market slump to high youth unemployment, continue to mount. The Chinese government faces a daunting task.
It must stimulate growth without fueling debt. It must navigate geopolitical tensions without derailing its economic progress. It must address structural imbalances without triggering social unrest. The path forward is fraught with risk. Section 7, 5% growth, a bridge too far? The ambitious target set by China's leadership has raised eyebrows globally. Against this backdrop, achieving the official growth target of 5% for 2024 appears increasingly unlikely. The economic landscape is fraught with challenges, from environmental issues to structural inefficiencies. The front-loading-driven export surge will prove fleeting. While exports have provided a temporary boost, they are not a sustainable solution for long-term growth. Weak domestic demand and deflationary pressures will continue to weigh on the economy. Consumer confidence remains low and spending is subdued, further complicating the growth outlook. China's leadership might be forced to revise its growth target downwards. Policymakers are under immense pressure to find new avenues for growth, but options are limited. The coming months will be crucial for the Chinese economy. Financial markets are jittery, and investors are closely monitoring policy changes and economic indicators. The world will be watching closely to see whether the dragon can regain its fire or whether it succumbs to the mounting pressures. Cultural resilience and national pride are at stake. The stakes are high, not just for China, but for the global economy as a whole. A slowdown in China could ripple across global markets, affecting everything from commodities to currencies.